I've helped hundreds of investors and developers secure financing for their property deals over the last few years, and I've helped them navigate all kinds of different market conditions. And throughout that, I always get asked some version of the question, is it still worth investing in property? Landlords have been selling up in droves. Interest rates have spiked in recent years, and government policy changes have kicked in and started to affect profit margins for investors. To get more specific, sometimes what I'm being asked is it worth it getting started with property investing right now? And other times, what I'm really being asked is it worth it at all? So, in this video, I'm going to break down why investors are feeling the pressure at the moment, why your individual circumstances matter way more than the headlines, and the exact next steps you need to take to build a robust, high-growth property portfolio regardless of market conditions. Before we look at why investors are leaving the market, we need to address one common misconception. Most people hear UK property market and they think it's one single entity. They read a headline talking about interest rate increases or house prices dips and assume that the whole of the UK is affected equally. Take a look at the house price performance between London and Manchester in late 2025. Manchester experienced a 3% price increase while London house prices steadily dipped. Now, this is just one brief example, and of course the UK as a whole will see generalised trends, but any investor weighing up whether or not UK property is still worth investing, take some time to ask yourself, what areas would you like to invest in? How have those areas performed in the last 3 to 5 years? Are prices and rental yields still strong? What's the demand like for the kind of property you're looking to invest in? Is that demand still strong, or are there signs it's wavering? But if you want a more detailed guide of what to look out for as you start your property investing journey, you can download our full buy-to-let guide that walks you through everything you need from start to finish. You can grab it completely for free. Link is in the description. Now, it is undeniable that property investing has become harder and more expensive than it used to be. So let's look at the reasons behind that and see how much you should actually be concerned by them. It hasn't been just one reason that investors are feeling the pressure, but a combination of factors. Interest rate increases, stamp duty and tax increases, and the Renters' Right Bill have all played a part. So it's easy to see why the average investor would begin questioning how worthwhile property investing is in 2026. But for every horror story, I've heard about plenty of others whose portfolios have come out mostly unscathed. And that's because these recent changes don't tell the full story. Ultimately, we know that the UK remains a stable and upward trending market for investment, and the demand for housing remains strong. But is property still a worthwhile investment vehicle to use? Let's take a look. Interest rates hit a 15-year high in 2023, but they're now at their lowest since then, and property prices and rental yields in the same time have continued trending upwards, particularly in smart investment areas like the north of England and parts of Wales. But the real benefit of property is leverage. £50,000 spent on stocks will get you £50,000 worth of stocks. But in property, £50,000 spent can get you a £150,000 asset, accounting for your deposit, legal fees, a light cosmetic refurb, and other costs. This means that when your property grows in value, your returns are on the full 150,000, not just your initial £50,000 investment. So if your property grows by 5% in 1 year, your gain is £7,500, a 5% increase on the full value of the property. And this doesn't even account for the rental income you'll generate in that time. You can see how the increased costs of investing through things like interest rates and stamp duty don't wipe out the financial benefits of a well-structured property deal. But of course, borrowing money comes with risk, and you'll naturally have costs that come with owning your rental property. So consult with an experienced finance broker, ideally one who regularly arranges lending for property investors in your chosen strategy. As you assess each deal, think about what is your goal with property investing: cash flow, capital growth. Select your property strategy accordingly. Are you looking at buy-to-let, HMO, commercial conversions, ground-up development, buy, refurb, refinance strategy? What is your risk appetite? The UK is stable, but are you happy to hold on during dips? Assess the finance options available to you. How much of a deposit do you have? Can you spread that over more than one property to spread the risk? Set realistic expectations for your property investing journey. This isn't a get-rich-quick scheme, but if you're willing to invest diligently, UK property still remains worthwhile. Property investing will always come with risk, but it's your job as a smart investor to use the tools available to manage the risk in a way that suits you. But sitting on the sidelines trying to predict the best time to invest is a surefire way to miss out on months or even years of growth where your capital could have been working harder for you. And knowing the answers to all of these questions is a great first step, but turning them into actionable plans is something completely different. So, if you want expert guidance to help your next deal get structured, financed, and over the line, whether it's your first buy to let or a full ground up development, you can book a free strategy call with me and we'll walk through your exact goals and assess the best possible funding options for you. Hopefully your perspective on the UK property market is a little more grounded now and you're more confident in the next steps of your property investing journey. But no matter how much you plan, it won't be much help if you can't secure the funding for your next property. So make sure you watch the next video where I break down everything you need to know before you get a buy-to-let mortgage in 2026.